The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we like to come to you at this time. Where's my mouse button? There it is.
The following takes place between 2 p.m. and 3 p.m.
So we're down 15 points on the S&P. Cash Dow's down 146, NASDAQ's down 71, and the Russell off 14 points. What else do we have going on at the moment? Well, volume is just slightly, well, more than a little slightly ahead of yesterday, but doesn't really portend anything other than the fact that we're probably stuck at these levels until the FOMC meeting. The dollar index, of course, still hovering around the bottom quarter of 97 at 97.23. We look at some of the other big ones out here. A lot of people making projections, or at least I'm hearing a few people making projections about the TLT. I think that was on the earlier part of the day when it got down to 130.52. It's trading out at 131.24. Again, I think everybody's kind of made their bed watching options today and at the very close of yesterday. I don't think that there's a great deal going to happen till Wednesday of next week, unless we have some major surprise. Earnings are coming in. We'll probably talk about that very late in the show. In the next segment, I've got a very special treat for you, something I've been working on for a little bit. So we'll dust that off and what they call a teaser in the broadcast business. Other things happening out here, like I said, volume just a little bit more. Does this portend anything? No. We talked about the SMHs a little bit yesterday and whether they closed below level. They did, but I don't see the kind of follow-through that I would like to see. We're down about 1.6%. Just look like we've gotten to a point where there's very minimal higher prices coming, at least till the FOMC meeting. And without another big tweet about trade, at least in the very short term, or in the fluctuations of the market, not much going on. What else do we want to look at here today? I did want to go to regular futures and commodities. Let's bring that up. Oil up 50 cents at 56.42. Gold down 8 at 14.15.60 is the last tick I show. Silver off at 19 cents. I think a lot of that happened right after Mr. Draghi from the EU in his zone decided to leave rates at the level that they were, which was, I think a lot of people thought maybe he'd go ahead and cut. That put a little bit a hitch in the get along. We now know, of course, that we have a new prime minister for the UK, and he's promising a hard break if necessary by Halloween. Maybe we're starting to look at that in something, but negative rates going forward may mean that a lot more money comes here to the U.S. to go in the United States markets. We're trading at about 17.5 for a average EPS in the bigger markets. Generally, 18 is thought to 19 is about the high you want to get out of if you've been in for a long time, and somewhere around 11 or 12 is where you want to buy. We've seen at least the EPSs coming in for this earnings cycle up, or at least the earnings up about 2% on average above what was expected. That's not much. It's not like we've had a lot of blowouts. And of course, some of the big losers today are like Tesla. Let's see what else. We've got O'Reilly Automotive off about 5%. Line Technologies, man, that thing's a gapper on earnings. Those are the people that make the clear braces off 27%. Xilinx off a little bit, just 2.5%, no big deal. Of course, a lot of people talking about Tesla off 14% at the moment, and Facebook down about 3%, no big deal so far. But again, not enough pushing on one side, not enough pushing on the other. Lending Trees off 17%. Bud is off, or no, up 4%. Royal Caribbean down 2%. Valero Energy off 4%. Just seeing some of the big. And Nokia, nice little pop, 19%. The big winner of the day is Netgear. We've talked about that stock a couple of times over the last week. I couldn't see anything that made me want to jump yesterday. I certainly wouldn't have been short. We'll maybe get a chance to look at that today also. What else do we have? That's about it for the ones that we want to touch on now. We'll get to them later in the show. Let's do a little history, and then we'll get ready for the rest of the show coming up over most of TFNN.com.
And it's all just a little bit of history repeating.
And on this day in 1978, Louisa Joy Brown, the world's first baby to be conceived via in vitro fertilization, is born in Oldham District General Hospital in Manchester, England, to parents Leslie and Peter Brown. The healthy baby was delivered shortly before midnight by cesarean section and weighed in at 5 pounds, 12 ounces. In 1998 or 1999, she had a baby. So we are now talking about grandbabies for the original IVS. Of course, a lot of people have various issues in reproduction. This gave yet another option to have your own baby by turkey baster, I guess, is what most people think about it. But on this day, 1978, of course, now we're having genetically modified babies. So that's a big deal. Okay. What else do we have? Okay. Well, let's go ahead and pop up some charts, and we'll get to looking at it fairly good. Okay. We'll look at Tesla before the break here. As always, I've talked about this stock being a $40 stock eventually. The question is when. You did have a big gap down. You got some fairly decent volume. This is more of a fundamental issue, I think, going forward. The idea that a single company can fend off everybody else in the automotive industry makes me always think that the people that are bullish seem to be a bit euphoric and certainly Pollyanna about the opportunity for others to make a car as good or better. Of course, the other thing is maybe the people that are investing in this company may figure out that they bought a growth company that is not any longer growing. And of course, all those, well, we've got 110 cars from the beginning of May through the beginning of May next year that will have true EVs to compete against Tesla. Not so much yet, but we've got a couple months to go, and there are going to be a ton of them. When we come back, we've got something very special for you. So I think you want to hang on and listen very intently in the next segment.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And I want to welcome to the show today Tim Ord. Early in my trading career, I looked to him. He was a very much the Wyckoff trader in price and volume. Pretty much wrote the definitive book, The Secret Science of Price and Volume. And I was happy to help him in getting the graphic charts into that. He has been on the Timers Digest top 10 list for forever. Been a top timer in gold, the S&Ps, and others. And early on, when I didn't know at all what I was doing in 1999, I would tape his interviews, go back through them time by time. Of course, he wrote the book, made it a lot simpler for everybody else. But I want to welcome Tim Ord to the microphones. How you doing today, Tim?
Good. Thanks for having me on. This is a pleasure. So,
well, that's good.
Looking forward to talking to you here. So
yeah, it's been a little while. What's most interesting to you in the markets now? I've got some charts that you sent me. If anybody wants these, they can email me at path@tfnn.com. I'll be glad to send them copies of it. But I've got your first chart up here. Is that what you want to start with?
Yeah, I got chart 1, 2, 3, and 4. And I kind of go in sequence here. The first chart is kind of a sentiment. It's a sentiment indicator, works fairly well. And what it is, the bottom chart is the index put call ratio, CBOE index put call ratio readings, and it's just a straight reading. And normally, when you get down to around 0.8 or lower, usually the market will at least take a rest. You know, flip sideways. Sometimes they turn out to be tops. Sometimes most times they're at least consolidations. And yesterday's close came in at 0.69, so that, and I have some red arrows showing last time when the market was net around 0.8, going back to May, what happened. And you can see in all cases the market did stall. And the chart above that is well, actually it's two windows above, is actually the middle window, and that's the total put call ratio readings. That includes the equities, the indexes, and all the CBOE options. And when it gets below less than 0.80, also, it's usually an indication of a short-term high. And yesterday's reading was 0.73. So the only reason I'm bringing this up, FOMC meeting is next Tuesday and Wednesday, and everybody's leaning on the call side here or the bullish option side, and that's usually not a good sign. We may kind of waffle around, but this sentiment on the CBOE option suggests we're at least going to stall in here. So I don't think there's any big decline coming before the FOMC meeting. The market may hold up, but everybody's betting on the call side that interest rates are going to be lower, and this will be great for the market. So not sure that's going to be the case. So we can go to the next chart if you want.
Okay, let me give me just a second here, and I will bring it up.
Do you have any questions on the first chart?
No, I actually do my own version of that in my newsletter every day, so pretty familiar with it. There was kind of an opportunity, I thought, for us to roll over maybe into yesterday, but I saw kind of the same thing that you did, but on both sides. That is, there wasn't a lot of upside and there wasn't a lot of downside. Going into yesterday, I thought there was potentially a lot of downside and still not much upside, but pretty much it. Okay, we've got that chart up right now, and it shows the trend.
Right. Well, this is actually the chart 2. It's a weekly chart, right? You got the SPX weekly up.
Yeah, we do.
Yeah, I think it'd be chart 2 would be the weekly. Should be a weekly chart.
It is.
Okay, it is. All right. Yeah, the only thing I want to point out on this chart, just kind of a bigger chart, goes back to, mid-2018. And what I want to point out here, there's a lot of support around 2940, which is basically in the vicinity of the previous highs of 2019, or early April around 2019. It was around 240, and back in October of last year is around 2940. And if you notice, we rallied up to that period in mid-June, and we jumped above it in first week of July, and there was no sign of strength above that high. The volume really dropped out on the weekly charts, which is not what you want to really see. You want to see a sign of strength above a previous high. That's what the SOS
how do you define a sign of strength in this one on the weekly? How much more would it have to be for you to think it was?
Well, normally, what I've studied in the past, if it's at least equal, that's usually a good sign. Preferably, you like to see higher than equal volume of the previous high. But if it's at least equal, your odds go way up. Preferably, you like to see 10 or 20% higher. But if it's at least equal, you're probably okay. And here,
I know you're kind of a big fan of when you've got incredibly huge volume, you almost assume that it's an exhaustion move compared to just 20% more or something.
Right. Yeah. If you get too big a volume, you're right. You're kind of just blowing the wick out of the candle because the market's going to stop. It takes a lot. You're talking about when volume increases too much, it usually stops the market. It takes all the energy out of the market. But if the volume kind of just has a sign of strength 10% higher or so, that's usually a real good sign. But if it jumps 30, 40% higher, that market's going to come back because there's too much energy dissipated in too short a period of time. And but on this one, the weekly volume just really shrank. I'm kind of eyeballing here. It looks like about 40% above the previous high. So what I'm thinking here, we're probably going to go back down and test those previous highs of around 2940 area. If you notice, last week we had a bearish engulfing, and this week we don't know what's going to happen yet. But I'm thinking we're going to pull nothing real great, but 2940, I bet, is probably what we're going to see here in the coming weeks. So more of a sideways consolidation type thing. I guess we break 2940, opens the door for a lot lower prices, but we'll have to wait and see when we get there. But The weeklies are not real bullish here. Also, seasonality-wise, from basically July until October, this is not the great time seasonality-wise either. So you got seasonality kind of going against you. You got put-call ratio readings are not ideal here for this rally to continue. So, probably we're heading for chop.
Okay. We're going to go to a break for a minute. Hopefully you can hang on through it. We'll talk a little bit more. Got a couple more charts. Anybody that's listening, if they'd like to get the charts themselves, I've got them zipped up here, and I can email them to you. All you need to do is email me at path@tfnn.com. We've got Tim Ord on from the ord-oracle.com, and we'll talk a little bit more.
Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back with Tim Ord of the ord-oracle.com. Somebody that's been on the top of the market timer list, top 10 for almost, well, at least I know 18 years. We're looking at chart 2 at the segment where we're showing the no sign of strength, which is kind of a Wyckoff term. You're kind of a price and volume guru. Disciple of Wyckoff. And that's straight out of his playbook of looking for a sign of strength. So continue on.
All right. Well, we had last week we had a bearish engulfing pattern, which is a candlestick pattern. Anyhow, it opens at the high, closes at the low, and totally engulfs the previous week. That's usually a bearish sign. A lot of times they go up and test those highs. And that could happen this week. This week's not over, but if we test last week's high on lighter volume, which we'll know on the Friday's close what will happen, that'll add to the short-term bearish sign. So I think the FOMC meeting is real kind of key here. So, but anyhow, it's not setting up for a continued rise, I'll put it that way. Also, we're at around the 3,000 level. Last times we're at the 1,000 level. We had 11% decline, and at the 2,000 level, we had a 7% decline off those round numbers. It could be actually reverse of that. I can't remember which one's which, but both of them around the 1,000 and the 2,000 level, the market had a decent correction. And so now we're at 3,000. You know, the truth there's only not very many times that that happened, but since we're at a round number again, we may have some kind of back and forth here, just like it happened at 1,000 and 2,000 when the S&P X hit those levels. So we may stall in here and build some sort of a gyration going forward, maybe for the next couple of months. But 3,000 seems to be at least has put some brakes on here with the bearish engulfing pattern and a break above some previous highs and lighter volume. So it's not an ideal situation for a continuation of the rally. But
So
really don't have a bearish signal here.
It's time to build cause to actually go above this and or get lower prices and basically you're not looking for higher prices. You're either looking for a stall or lower prices coming forward. Yeah,
that's what I'm kind of looking for here. The 2940 area is kind of an important area, and we'll go to the next chart. We'll look at a daily chart, and this is kind of a unique chart. It's a chart of the VIX, and VIX actually trades opposite of the S&Ps. And if you do a ratio of the SPY to VIX ratio, normally when the SPY is outperforming the VIX, that's usually a bullish short-term scenario. When it's underperforming, it's usually a bearish scenario. And this chart goes back to late April and shows the times what happens in uptrends and downtrends on that SPY VIX chart, which is the second chart up from the bottom. And it does pretty well, you know, especially if you look back at the late May or late April, early May high. If you notice the SPY VIX ratio actually turned down before the SPY did. You can kind of see it there. The SPY was making higher highs going into the 1st of May, and the SPY VIX ratio is actually making lower highs and lower lows. So that was definitely a warning that decent decline was coming. Since then, we did turn down today, obviously, because the market's down, but it showed the last couple of highs there, too, with the SPY VIX ratio turned down when the market turned down. That's kind of confirmation. So but anyhow, right now,
above and below that, are those like Bollinger Bands?
The what?
There's lines above and below the dotted line. Are those like Bollinger Bands or?
Oh, on the VIX chart?
Yeah.
The VIX chart, yeah. Yeah, it's just Bollinger Band. I kind of watch it normally when you get too exuberant one way or another, a lot of times it's reversal. And so I kind of pay attention to that. But the real indicator on this chart, I think, is the SPY VIX ratio. And if you notice, we've been kind of going up here. If you notice, the SPY VIX ratio is pretty much matching its previous high, where the SPY was making higher highs. Mm-hmm. And that's kind of a warning sign. You want to see both make new highs together. and when they don't, that's kind of a bearish sign. So even though we have pushed higher on the SPYs, the VIX, the SPY VIX ratio is just making pretty much close to equal to the previous high. And to me, that's kind of a bearish sign, kind of energy to the upside, in my opinion, according to the VIX ratio here, is kind of, the steam's kind of running out. So is it real bearish? It's not as bearish as it was back in late April, early May, where the market was trending higher, obviously going higher, and the ratio was actually trending lower. We don't have that situation right now, but it's not as bullish either. It's not bullish either, so it's more of a sideways pattern. If you notice, I put a daily. You can't really see it on this chart, but if you look in late June, there's a gap around 24 or 29.50 range. You can barely see it. The next chart, you can see it a lot easier.
Chart 4?
Yeah, it'd be chart 4.
Okay. We're on that now.
All right. If you go back to, there's a pretty big gap there around that 29 or 294 on the SPYs to SPX is to 2940. But that's also where the weekly highs of 2019 and 2018 was, in that range. So that 2940 gap has quite a bit of significance. So I think it's probably going to hold first time, if indeed we do pull back there. The first time it's probably going to hold there. Then from there we'll have to wait and see if it does get there. But that 294 on the SPYs is a pretty important area. So, if you notice last Friday, which is the big down bar in last week's last Friday, which is the first, be the 17th. I really don't have it marked on the chart here, but the first arrow down, that's last Friday. That's that anomaly where the market was going up and all of a sudden just turns down on expiration Friday. That had a big volume day. And
you want to hang on for just another short part of the first segment, or the next segment? We're going to break. We've got Tim Ord on from the ord-oracle.com, and we'll be back in just a minute.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back with Tim Ord of the ord-oracle.com. I've seen, I think I've got everybody that asked for the charts out, so they'll have a copy of it. A little easier than seeing it here. Let's get back to this and where you left off, Tim.
All right. Well, last Friday, if you can see it there, that's the first arrow down. I wanted to point out the volume on that, which is pretty big volume day. It's kind of a exhaustion day. Volume jumped over 20-30%. A lot of times that's exhaustion to the downside. Then we rallied yesterday. We rallied up through it, and if you notice, volume dropped about, eyeballing it here, about 40%. That suggests a false breakout to the upside of last Friday's high. So we not really want to chase that market. And now today we could be drawing a candlestick pattern called midpoint harmony. So it's kind of a bearish sign. It's starting on a shorter time on the weekly time frame. If you notice, or if you remember, we broke above some previous highs on the weekly time frame on without a sign of strength on the weekly time frame. Now we got on a daily time frame a break of a previous high on liner volume also. So the picture's definitely showing signs of bearish development. And how big a bearish development is going to be, I think it's probably going to be more of a sideways market, but I'm thinking somewhere in this vicinity, probably around the FOMC meeting next week, there's going to be some sort of a high in this range. We're going to pull back down to that gap level at 2940 on the SPX, 294 on the SPY. That's my whole scenario over the next probably month or so. So it's not the time to add new money to the markets, what I'm saying. But the downside is not that significant. But if 294 does break, it could open the door for much lower prices. But that, in my view, that probably is not going to happen. But there's not much upside here. But 294, that's what, 60 points down. So that's 2% down, which is not real bad. Not great, but not real bad. So
not great, but it's not bad.
My whole scenario here.
Anything else going on before we finish up here? I think that's the last chart I have.
Yeah, that's my last chart. This is kind of a synopsis of what may be developing over the coming weeks. Gold, I think it's we have a monthly chart that broke out. I'm more in favor of gold stocks. I think gold stocks will outperform gold, and that's what normally happens in a bull market. And so far, the GDX-GLE ratio is rising, suggesting gold stocks are outperforming gold. So I think near term is kind of hard saying because we really had a blast off from the May low up to where we are right now. So the market's due for a rest. But in general, I think that market's going to move higher over probably into the October time frame.
Well, for those don't know, I I think you were around 1999 or 2000, the first lone voice I heard that gold was coming out of a bear market, or at least a sideways market that had run 10 years.
Yeah.
Do you see?
I was. Yeah.
Go ahead.
You're right. Yeah, I was back. Yeah, I forgot all about that. Yeah, I got bullish back in right at that low. I think the low was around 250. I was like 270 bullish. I mean, it was pretty close to the low, and stayed. Actually beyond 2011, that was past the high there. So, but yeah, everybody.
The reason I bring
totally
that
bored
up
with
is, what do you when you think about that and the sideways action we've had for the last couple of years on gold? Is this just a continuation, or is this a new trend starting, and we should forget mostly what's happened in the past?
Well, I think the high of 2011 down to the low we had in 2016. I think that was a meaningful bottom, 2016, and we're just that big explosion off 2016 to what it was basically was December of 2015, really. Then it rallied up to July of 2016. It consolidated, and I think another major low was made last August of 2018. And even though the market's kind of been slow here, I think that bottom of August 2018 was another major low. We're starting another major high, another major rally up. So I'm thinking it's probably not going to be as powerful as the 2000 low to the 2011 high, but I think another major rally has started. That's going to last for 2022, 2023. I think it's not just a blurb up and go back down again like we've been having. I think it's a impulse wave that'll last another several years. That's how I'm looking at it anyhow.
Do you have any opinion on bonds right now?
Do I have any what?
Opinion on bonds?
No, I really don't follow bonds a whole lot. I mean, I keep an eye on it, but I'm not the best person to ask about bonds because I really don't get into the nitty-gritty of it. So, no opinion there. So, but I'm kind of bearish on the dollar going forward and bullish on gold. And stock market, actually, I think in general this year is going to be a pretty good year. Just over the next, 2, 3, 4 months may not be that great. So I'm thinking we're probably hitting some sort of a decent consolidation that is going to be more of a chop market, possibly into September, maybe even October time frame. So,
well, we're going to wrap up this segment in just a second. If anybody wants to contact you, the best way is probably ord-oracle.com. If anybody actually needs the links or anything that we showed today, just go ahead and email me at path, P-A-T-H, at TFNN.com. So you've got a daily newsletter. You've also got the book, which I thought I had there we go. I've got it up there, The Secret Science of Price and Volume. And like I said a little earlier, I think I helped out with the charts. Seems like a couple of lifetimes ago now. But the techniques for spotting market trends, hot sectors, and the best stocks. And anything else you want to add before we go to break here in about 30 seconds?
No, I do have a 2-week free trial on my market letter. So you just email me, and I'll put you on a list and give you a 2-week free trial to give you a view of what I do 4 days a week, Monday through Thursday. That's when the market letter comes out. So
okay, but I would say I would characterize your newsletter as probably a lot more long-term than many, or maybe even mine. You tend to have kind of long-term horizons, right?
Yeah, it's not a day trading. It's my view is at least a couple of weeks, if not longer. But sometimes they turn shorter than that. Sometimes they turn in longer than that. But it's at least a couple of weeks.
I want to thank Tim Ord for being on from the ord-oracle.com. And hopefully we'll have him on again soon.
Right. Well, thanks for having me on.
You bet.
All right. Bye.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And what do we got? Oh, I wanted to talk about earnings tonight. I almost had forgotten about it. Where do we get it up here now? Occasionally I nod off in my aged years. So this is Thursday night. There we go. Amazon after the bell right at 4 p.m. So you'll get that before the futures close. Also Alphabet, also Intel, Starbucks at 4:05. Google comes out a minute after futures close. And see what else do we have. Juniper Networks, Expedia, Stryker, Mattel, Proofpoint, Sleep Number Corporation, Decker's Brand, LogMeIn, which used to be PC Anywhere, Mohawk Industries. Of course, tomorrow morning we open up at 7 a.m. with Twitter. We've got McDonald's, PG&E, Colgate, Palmolive, Phillips 66, Yandex, which is the Russian kind of Yahoo, not Yahoo, Google. So we've got a little bit more action coming up after the bell. Again, we're down 18 points. Volume has picked up a little bit, but it certainly looks like we're kind of in a trading range probably for the next few days, probably up on Monday, maybe down a little bit on Tuesday. FOMC at 2 p.m. on Wednesday. And again, volume hasn't been that strong on the high side or on the low side. It's a little bit more on the low days, those low days not being as much. We've got about 4.6 billion shares as we get ready to close the show today, which is a little, I'm going to say a smidgen more than we've had in the past, but it's not massive volume off the top. So we'll see how these earnings come up today and in the morning. I think that's going to tell us a lot about Monday and Tuesday before the big show, the fireworks, on Wednesday. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.